Last but not least, we have Mike Pettis from Guanghua School.
Thanks very much, Victor. If I seem a little bit woozy, it's because I've lived in Beijing for 10 years and I'm really not used to the air in La Jolla. The last 4 or 5 years have made it very clear to us that there's an awful lot of what's been happening around the world that we should accept with a great deal of skepticism. And I think it's not just in the case of China, it's in the case of Europe and the euro, the US real estate market, et cetera. But I think especially in the case of China, we need to be very skeptical about a lot of the claims that we've heard and a lot of the promises that my investment banking brethren have made. Because many of the numbers don't work and they can't work. I want to talk a little bit, first of all, about the internationalization of the renminbi as it's occurred so far. Now, we often hear that the numbers are tiny, but they're growing so quickly that they're going to lead to spectacular results in the future. Tiny numbers have a tendency to grow very quickly. It's because they're tiny. So right off the bat, we need to be very concerned about those numbers. But more specifically, what I'm going to argue is that the internationalization that has occurred to date, for the most part, doesn't really represent internationalization of the renminbi. It represents something else. There are two things that I want to speak about in particular. One is trade-related issues, and the other is the issue of central bank reserves denominated in renminbi. If you look at the numbers, it's hard to argue that there hasn't been a spectacular increase in the redenomination of trade into renminbi. But I would say that those numbers are wrong. They don't make sense. What really has been driving the redenomination of trade into renminbi has not been transactional purposes. It's largely been speculative. Until around the end of the second quarter of last year, if you disaggregate the trade, excluding remittances and royalty payments, et cetera, just the sheer trade into imports and exports, what's very noticeable is that the vast majority of trade that was denominated in renminbi were Chinese imports. Something like 90 to 93% of the total amount of redenominated trade was imports. Not exports. China exports more than it imports. If it had been driven for transactional reasons, you would have expected a better balance. But it was mostly imports. And why is that? I would argue that the reason so much of the redenomination was in the form of imports is because if China imports products and pays in renminbi, that results in a renminbi deposit in a Hong Kong bank. If China exports products and it gets paid in renminbi, it results in a short renminbi position overseas. Now, up until the end of the second quarter, beginning of the third quarter of last year, there was tremendous speculative demand for long positions in renminbi, as you know. If you looked at the NDFs, if you looked at the direction of capital flows, people wanted to be long renminbi because they expected the renminbi to appreciate. And I would say that it's not at all a coincidence then that most of the trade redenomination was on the import side. It was driven by speculative demand for renminbi, not by transactional needs. That's changed since around September, October of last year. There's been a better balance between the two, and the growth rate has slowed sharply. That's not a coincidence. The reason the growth rate slowed sharply is probably the same reason that we saw a shift in the forward value of the renminbi in the Singapore NDFs, and we started seeing evidence of capital outflow. The speculative demand for renminbi dried up, and therefore the composition of the trade and the amount of trade denominated in renminbi dried up. That to me is very strong evidence that trade had nothing to do with it. It was speculative demand. In other words, what looks like trading demand is driven by capital restrictions, by the desire for people to be long or short renminbi. Another very interesting area on the trade side that has been getting a lot of comment recently is that the amount of trade LCs have soared. China, or the renminbi, is now the third most important currency in trade LCs. I think it's 4% of the global total. Of course, the dollar and the euro are the top two. And that seems pretty significant. But again, it's not significant. It's driven by capital controls. My central bank seminar about 6 months ago started looking at these transactions. And what they argued is that what's driving the transaction is the arbitrage between onshore renminbi and offshore renminbi. In other words, because of capital restrictions, renminbi offshore and renminbi onshore trade at different rates and at different interest rates. And basically the LCs are a successful attempt to arbitrage that difference. So the explosion in both direct trade transactions and an LC financing of trade was not driven by trade. It was driven by restrictions on capital flows. It was driven by speculative demand. It was driven by arbitrage opportunities. So I would say almost all of those numbers don't have any meaning. The actual growth rate of real trade denomination is probably very, very small. What about the amount of central bank reserves held abroad denominated in renminbi? That's certainly gone up. Again, it's gone up from a tiny, tiny base. Now, these mostly occur in the form of bilateral agreements between the PBOC and a foreign central bank. And we don't always have all of the information behind the bilateral agreements. But we do have some reason to be skeptical about those numbers. So, for example, a member of the Board of Governors of the Argentine Central Bank, who's an old friend of mine, was in China a couple of years ago, and he came and spoke to my central bank seminar. And he spoke very openly. I won't mention his name, but what he said was quite interesting. He said, first of all, these are not actual swaps of currency. They're facilities that can be called upon. So there isn't really an increase in renminbi reserves at the central bank. There is the right to call on an increase in central bank reserves. And he said, and this is the key point, that the transactions must be settled in dollars. So, in other words, the swap facility was nothing more than a loan to the Central Bank of Argentina to be settled in dollars. And when that transaction first came out and everybody said, isn't it amazing, even Argentina is taking renminbi reserves, my response was, anybody who wants to lend money to Argentina is able to do so, right? There's really no trick to it. But the important point is that it gets settled in US dollars, suggesting that what Argentina really needs is access to additional dollars more than anything else. So this doesn't prove anything, but it does suggest that we do need to be very skeptical when we see these numbers. By the way, one other thing that I forgot to mention is that even Chinese exports that have been redenominated in renminbi, we have to be very careful about, because a significant component of it takes place between Chinese mainland companies and their offshore, their Hong Kong subsidiaries. Why does that matter? Well, think about it this way. A Chinese exporter sells something to an American importer in dollars. That's the way the trade used to occur. Now he changes the form of that trade. He sells it to his Hong Kong subsidiary in renminbi, and the Hong Kong subsidiary sells it to the American importer in dollars. Economically, what happened? Absolutely nothing. But if you look at the trade numbers, exports that were previously denominated in dollars are now denominated in renminbi. So I would say, again, be very skeptical of those numbers. I don't believe there has been a significant increase in real trade denominated in renminbi. I don't want to run too long, but I wanted to bring up one other issue, and that is we need to think about what are the requirements for reserve currency status. And there are basically, I would argue, two that are very important. First off is, how do foreign central banks accumulate renminbi? It's very difficult to do so. They have to be able to buy renminbi-denominated bonds issued by the Ministry of Finance, which obviously right now they can't do, but let's assume they're able to do that. I often hear people say that one of the great advantages of the internationalization of the renminbi is that it solves a great problem for the PBOC. The PBOC has all these dollars they don't want and all these euros that they don't want, and if only the renminbi could become an international reserve currency, they wouldn't have to hold dollars and euros. Now that, of course, is nonsense, right? The only currency the PBOC cannot hold in reserves is the renminbi, whether or not it's a reserve currency. Foreign currency reserves are foreign currency. But it's worse than that, because if there is a significant increase in foreign purchases of Ministry of Finance bonds, then there's only two things that the PBOC can do. It cannot intervene in the currency, in which case we would see an increase in the value of the renminbi with all of the trade impacts that one would expect, or it could continue intervening in the currency, in which case the amount of reserves that the central bank holds actually has to go up. So rather than resolve the problem of what to do with all those dollars and all those euros, it's going to make it worse. There is no way that foreigners can accumulate significant amount of renminbi bonds, renminbi-denominated bonds, without having an impact either on the current account or forcing an accumulation, an increase in the rate of accumulation of reserves. And if high levels of reserves, as Nick pointed out, are a problem, then clearly higher levels are even more of a problem. The other thing that I would throw out, not for an exhaustive discussion, but just perhaps as a way of positioning questions, is we all agree, or almost all of us agree, that it doesn't make sense to internationalize your capital account until you have a robust financial system. Now, Nick has talked about that a lot, and Victor mentioned Nick's 1998 book, a great book, but if you can only read one of his books, I would say read the one that came out a few months ago, where he goes very deeply into this whole issue of the financial sector. And I would argue you can't understand China, and you can't understand the difficulty of the rebalancing process without a firm understanding of the financial sector. So we're going to need significant reform and improvement in the financial sector because it is neither robust nor flexible, which is a minimum condition for internationalization of the currency and free capital flows. Has there been reform in the financial sector in China? I would say there hasn't. There's been none. Now, that may sound like a surprising statement. Lots of things have happened. For example, just yesterday, they lowered the deposit rate, but they allowed you, it's no longer the minimum. The minimum is now 10% above the minimum. To me, that's like going to a restaurant, and at the bottom of the menu, they say, the prices are everything that they say plus 20%. I don't know why you just don't use the higher number. I don't know if that represents a real liberalization of the deposits. What we're going to need, if there's going to be liberalization of the financial system, is two things, and Nick speaks about them a great deal in his book. The first is corporate governance reform. By that I mean banks have to become economic entities. They clearly are not. Credit risk is socialized, the direction of credit allocation is socialized. We haven't made any reforms there in the past 10 years. And then the second point is interest rate liberalization. And clearly there has been no interest rate liberalization in China. And there won't be interest rate liberalization, in my opinion, for the reasons that Nick says. China, like all countries that have followed this investment-driven growth model, the sort of investment-driven growth miracle, without exception, they have all ended up with a significant debt problem. And I would argue, and in large part I think the perceptions in the market have changed because of Victor's work on local and municipal government borrowing. I would argue that debt levels in China are much too high to permit significant liberalization of the interest rates. A precondition for that is going to be to bring debt levels down, and it's going to be quite difficult to do that. So in my opinion, if we do get the necessary reforms in the banking system that are a precondition to liberalization of the renminbi, it's going to take many years, and we're talking about a decade or more of reforms and debt reduction. In other words, I don't believe we're going to see internationalization of the renminbi, and I'm confident in saying that because I've been living in China for 10 years, and every single year it was 5 years away. It hasn't happened. I think it's going to be very difficult for it to happen. So with that set of, I hope, provocative statements, I will finish. The only other thing that I will mention, I have to mention this, is the Beijing new music scene is one of the best in the world. There's an astonishing group of young musicians. I encourage you to follow it. Thank you very much.